It was a bullish day in the markets. On the 26th of May, we have rallied pretty nicely here across the spectrum. Let's talk about the details of this market. I am your host, The Cowboy. This is Elliott Wave Cafe and Charts of the Day. Let's get started. All right, so we've had a pretty decent day. We've been looking for this for a while, and we finally got a little bit of a rally. I'm not sure if this is, the beginning of something or we're going to return to new lows. I don't think so. I think there are some indications there that we could, have a little bit more of a fueled rally moving up ahead. I think we have a pretty broad participation this time around, and everybody kind of jumped in and joined this early recovery, let's say, into the stocks. Consumer discretionary, which was beat up for a long time, was up almost 5%. Communication services, technology, financials, industrials. So the big sectors in the market that are that have the biggest weighting into the SP 500 here came up pretty strongly. And then the most defensive ones, XLP, healthcare, utilities, and XLRE, were towards the middle. Energy was still a pretty good one, up about 1% on the day. But these were pretty much the large leaders. Dow was up about 1.6%, S&P 500 2%, and then Nasdaq and the Nasdaq 100. These were close to 3% rallies, 2.7 and 2.8 almost on there. Mid caps 2.33, with VIX continuing to drop here at about 27.50 at the moment. I would have expected VIX to drop a little bit lower based on such a strong rally that we've had. So that's a little bit of a caution sign for me. So I'll keep an eye on it overnight, see what happens if Asia continues to buy these stocks and we're getting into a much greener day tomorrow. Also, we want to see a continuation on this, not just a failed rally up into this highs back in here. So something to definitely, keep an eye on. A lot of the indicators that we're watching, a lot of the sentiment indicators I've been talking about, they were at extreme levels. And usually when you get, such a strong moves in a particular direction, like that, I think maybe 9 out of 10 times, you're probably going to get some relief rallies moving forward. So, the market is starting to look like it's trying to find a little bit of a low in here. I'll take a look at the motive wave counts, but, I don't think it's, I think it warrants to continue to pay attention at the sentiment and, kind of where these stocks have come from, especially into some of the larger sectors in here, like XLY, XLC, and XLK, the ones that have been kind of taken down the most. I think the market basically did a pretty clean, rebalancing in here. And actually, let me show you a chart because I think this is important. Let me see if I can find it here. I think I have it. I'm going to go right here, and I think it's in my stream model here. And I just touched on it this morning on the earnings. We've had a pretty good webinar for about an hour and 40 minutes, I think, almost of talks about the everything that's kind of going on in the macro landscape, commodities and cryptos as well. But what I wanted to show you is basically this chart here that takes a look at the earnings. And you might have seen this from me before. It takes a look at the PE ratio of the S&P 500 and kind of, where the earnings are at about a 20 PE, and then, what's more of a fair value at about 15 and what's an undervalue at about 10. And what I'm trying to say is that I think the market has corrected a lot of this overvalue that we've had for, let's say, at least since the pandemic lows in here, with all the monetary and fiscal stimulus we've got, and these things have gone, parabolic. And the market is just kind of cleaning up some of that stuff. Now it feels bad because, it almost feels like a crash in the markets. But all it did basically is just kind of shook out a lot of that froth that was up into this climb in here. And we're coming back into some interesting value. So maybe, okay, it's not as much of a fair value as you would like at about 3,200, maybe 3,400 in the S&P, and maybe we'll get there. Who knows? But if you look historically here, the market doesn't give you a lot of chances, and the market is not really coming back to those levels, right? They are trying to. You're going to pick up, a little bit better value by paying, let's say, a little bit more for the market than necessarily, being a stickler for let's say, an undervalued market. The market is not going to gift that to you that easily. So, it could be that the earnings are going to roll over just like they did in 2008, 2009. I don't think that's the case. I think a lot of companies are still presenting very good earnings. We're going to see these lines kind of as the earnings season is over. We're going to see it climb probably higher in here, and then I think the S&P 500 will follow suit. So I just wanted to kind of put a pause on this and just show you where we are in a relationship with the earnings in the market. And up here at about 17, 18, 20 time earnings, I think it's it's a pretty decent bet that you're making. So just a little bit of a pause on that. Now the Fed is going to meet over in next month, and they're going to have about a 50 basis point rate increase in the month of June, and then they're having about a 50 basis point increase in July. Then they have a pause in August, and then they're coming back at the end of September, I think September 21st, where they're only talking about a 25 basis point increase. Now, the talk in the market right now is that due to the latest economic data that we've gotten, and maybe to kind of what happens in the interest rates and the bond market, since those have already tightened conditions for the Fed, the talk is that the Fed could pause and at least step on the brake pedal a little bit and just pull back and just relax the aggressiveness of their monetary stance at the moment. So, maybe that's why we've gotten some of the rallies here for the past couple of days as the market is trying to kind of gain its footing and rebalance some of the talks that have been happening probably inside the Fed in here. They're probably going to go with the 50 basis points, but if you look down into the futures at June and September, the probabilities that they're going to hike at the same rate are continuing to come down, which is the market kind of repricing this aggressiveness. So pay attention to that, because I think that's important. When it comes to another indicator here that could tell us that the markets could bounce from here. I'm looking again. I continue to look for a 15 to 20% rally in the both in the S&P 500 and Nasdaq, and I'll show you the charts on Motive Wave there where we have the counts. So the advanced decline line on the S&P 500, it's pretty strong still. As the S&P 500 is making lows in here, right? You can see this is a pretty, let's say for now, clean three-wave type of decline, because this is the largest impulsive sequence out of here, or corrective for that matter, like in an ABC, with an impulse into the 3800. The advanced decline line, it's flat, and if anything, it's starting to push higher. Now pull a trend line from this highs to this lows, and just kind of look at that and see if we're going to creep back above that. That means that this advanced decline line will start to push higher. Number of advancing issues will continue to increase versus the declining ones. That means we have underlying strength. It's a breadth indicator. It's going to probably push the S&P 500 towards 42 and back towards 4,300, and maybe even back towards 45. So that's the rally that I'm looking for in the S&P 500. Quickly, let me jump through, take a look at the macro daily. This is something that I do, and I review daily here just because it's giving me an overall look of the markets. Bitcoin, I'm not going to go into the counts. I keep them for the for the pro room there, guys. But for the Bitcoin channel that I opened. But what's going on in here? It's that Bitcoin has tried to sell lower. In this morning, it almost started to decouple, right, from what kind of happened in the equities. The Nasdaq and the S&P 500 was pushing higher. Bitcoin actually pushed lower. It was one of the things that I've quickly told my members. I said, something is going on here. Pay attention. I think we're going to get a squeeze up rally. This thing kind of came back from 28K to about 29.4 right now, and I think it's what's probably going to happen here in Bitcoin. They're probably going to attack the top of this line and try to break above it a little bit and see if it's going to be sustained, or if we're going to fail back lower if the S&P 500 rally fades away. But definitely an interesting move in Bitcoin. It's got a lot of overhead supply. We're below the 50, we're below the 200. There's still a lot of wood to chop before we can embark back in a more of a bullish thesis in Bitcoin. For right now, it's trying to find its footing. It's trying to balance out. So we're going to leave it alone. Here is the Nasdaq Composite. So nice rally after, let's say, 1, 2, 3 tests of the lows. We're coming back up higher, still in a big downtrend in here, but this is a pretty bullish development in here, and we want to see continuation, maybe a little bit of a pullback, let's say into Friday, but as long as these 11,200 lows remain, and this is on the composite, remains untouched, I think there's a chance of a further advance. You can just quickly see where the resistance level comes in. So you have something back there at about 12,400, and then you have something a little bit higher, 12,600. As the moving average declines, I think that's where we're going to probably find a little bit of resistance. As we're coming down to gold, gold is back above the 200-day moving average. It's a flat market. I'm not interested in it. It doesn't excite me at all, at least for now. I'm looking at this to be maybe a 1, 2, 3 triangle, 4 maybe up in 5 for an impulse, then maybe buy a 3-wave setback and then see if we can rally further. For right now, it's just a waiting game for me on the gold market. Dow Jones even stronger, nice bullish candle out of these lows. We didn't have as many tests of these lows that we've had in the Nasdaq, right? It was just a quick flush lower, a comeback higher. This move from the highs to this lows looks highly corrective. This whole decline in here, it's got an impulsive leg here, a little bit of a messier leg down. So if we're able to kind of continuing to climb, we're coming back into resistance. So pay attention to here. Maybe it's going to pull back like that and then push back up higher. So that's the Dow Jones. Nasdaq 100, again, just like Nasdaq Composite, on a similar story, 12,276. The resistance, it's not far above. Back here, we're going to hit our heads against those levels, and then right away, we're going to climb back towards 13K. If we can stage this up in a 5-wave, that's going to be a good indication. We're going to look for a pullback and then for a pushback up higher. So that's what I'm watching for in the Nasdaq. S&P 500, pretty clean setup as well in here. So you're pushing lower. I'm going to show you the count up and down. All those indicators here were screaming that we're getting a lot oversold, fear, sentiment extremes, all kind of things kind of happen here at about 38.50. It follows through, with a little bit of a rally. It's still early, still premature. This whole thing could be maybe a triangle, and then you're going to push lower one more time. So I'm watching for a confirmation on a break above those levels. I think that's important. And then just like in the Nasdaq, you're going to get a big level here at about 4200, 4150, where the bears are going to show up and say, uh-oh, let's see what happens here. Let's see how much power you got, your bulls. So that's what's going on there. The dollar index pulled back nicely. I think we have probably finished the first impulsive decline of this high. In here, I think we're probably going to correct a little bit, maybe get back towards these levels, retest them, and then probably fall lower. I think this is an impulse, and I want to sell the dollar against this impulse higher, against this impulse lower. The trend is still up as long as we're above the 50-day moving average in here. But the fact that we've declined from such an important high in here again, with signs of sentiment extremes, a relaxation in the dollar is what's giving you a rally into the risk assets. So following this macro picture, I think it's important because it helps you position ahead of time into some of the moves that are happening now in the market. So I was talking to my members, watch the dollar in here. I think it's going to slow down. I was cautioning on that as it was coming back at about 104 in here, and get ready for some rallies in here because they're coming. Bitcoin did not respond yet as much to the dollar weakness, but give it a little bit of time, and if these things continue to sell lower, I think we're going to see more from Bitcoin on the upside. 10-year treasuries continuing to kind of go higher, right? The bonds and the yields are selling lower, 275 at the moment. They're continuing to relax, but I'm watching the 50-day moving average in here. This is a pretty important uptrend indicator. I want it to close below it, then maybe do some kind of a pullback in here, and then we're going to watch to see if we can get a further relaxation into yields. As we're moving into the month of June with the Federal Reserve lurking, in the shadows there. And then volatility in the index drops down. I would have seriously liked it for it to kind of be already back at about 25. It's still highly, it's still kind of elevated. So, I can't put a lot of trust in this rally. I like it, but VIX has to respond. The fear gauge needs to come back down in here and start to break below its 200-day moving average in here and start to get back below 20. I don't know if we're going to get that. It's still a lot of fear out there, but we have had a big divergence in the VIX versus the S&P 500. I've talked about that numerous times in the program, in these videos, that, as long as VIX is not confirming a break above these levels, look for a relief rally to come in the markets, because, that's kind of what the fear gauge is signaling. Oil, it's picking up steam a little bit in here, 114. I don't trust it much. I'm looking at this move maybe as a three wave. That's a big resistance level back in there. You might think this is maybe a triangle in here, like an A, B, C, D, and maybe an E wave, although it's not very clean. And then you can have a 1, 2, and then 3, 4, and 5. Let's see if this happens. I'm going to watch, as oil kind of climbs back. If it does, maybe back towards 125, and then we'll see what happens from there. But I am not too excited about oil going higher. I don't think it's going to be sustained. So, but we're not going to fight it. We're just going to kind of let it kind of sit right now, marinate, and then if it comes back down and starts to break below some of these key levels, then we're going to short it. EFA, pulling back here, very nice move into these markets as well, with relaxation in the dollar. MACD pushing higher, and then the Russell, just a three-wave move so far. Three waves sometimes become 5 waves later on, so you can get a 3, 4, and 5. But so far, it's just a three-wave move, so it worries me a little bit. There might be another leg lower coming. We're going to keep an eye on it. If I'm going to see a break below these levels back here, then it's likely that this thing will turn lower. So for me, this is the bottom line. This is what kind of confirms a three-wave advance. And then TLT, I was talking about it here. Might be some bullish setups coming into it, but I'm going to continue to wait on that. And then yeah, let me just jump over and take a look. So I talked to you about this already. Let me jump over and take a look at the counts. So NASDAQ 100 in here going up on the daily chart. I think you can argue that this is a pretty decent three-wave so far. So you have the first impulse, then you have a sideways correction in here, and then another impulse lower. It's really hard to make a 5-wave move out of this. So until it becomes 5, we got to consider it a 3-wave. The push lower in here, it's not like in the 1618 or anything too much. It's starting to pull back. We're still in a downtrend. 12,592, just like I've showed you, it's important. And then the next level of resistance is going to be just slightly above that. So we're still going to be fighting a little bit of a downtrend in here. Might want to do a trend line. I think that they're probably tagging it or broke back above it. But I'm looking for this market, based on kind of what I see going on, to do something like this, get back towards these levels. Okay, and this could be the end of the wave 2, and you can start to climb higher. You're going to need a bunch of indicators for that to happen. You're going to have to kind of start to take some of these levels, go impulsively higher, and there's a lot of overhead supply, right? Put it that way. So I don't know if it's a wave 2. That's why I put an alternate as a wave W. This could be an ABC of W of 2. You're going to do another rally in here, maybe in an X wave, and then you're going to come back down maybe towards the end of the year and do another decline. So we're going to just keep an eye on it, right? It's just, there's a lot of breadth indicator here that are still showing, massive divergences. They're going to start to correct as the market pushes higher, but it needs to show us strength. If we're falling from here again, then, we're going to start to look ugly again to the downside. So, for right now, it's just a little bit of a green shoot, a little bit of green in there. We'll just watch it. Here is the SP 500, right? A little bit of a different structure. I mean, you could do like you did in the S&P, maybe an A, B down in C. I'm still kind of struggling to see which way is better. It's fine either way for right now. I'm going to go with this. So A, B down in C. You have a little bit of a better equality between wave C and wave A. This decline, it's a little bit problematic because it's a bunch of overlap in there. So it could be a W accent and a Y in here already. And then you can move to new highs. But this is the rally that I'm watching, that I will be watching if it happens, right? Just an A, B, and an up in C for an X wave in here, and then maybe another decline in there. This is the resistance. And again, second wave could be finished or here, or it could continue lower. So the weight of the evidence, it's going to be as the market kind of climbs higher, creates an impulse and starts to overtake some of these levels to the upside, and we're going to look much better. One thing that I always watch is the 618 pullback of this entire move, right? If you kind of pull that, put that up on the chart and kind of see where that falls, that can guide you a little bit to see, where this retracement can kind of travel to, and if you're breaking above those levels. And that's right now, it's about 43.21 on a pullback in here. We're still below 38%. We got to get back above 50, and then maybe somewhere up into the 618, you're going to correct, and you're going to do something like that, and then the bears will start to lick their chops and say, ooh, I got you, and they're probably going to try to sell this thing. But if there's a lot of, buying coming into this market, a lot of excitement, I'm not sure what the Fed will do. I don't know what the stories will be when we get back there. If we do, this thing can continue to break and keep going, right? So that's all I have in here in the SP 500. One more thing I wanted to show you guys. So here is the Pro Room. This is the stream that we've had this morning, about 84 minutes. I went over the futures open, Fed Watch, S&P 500, macro weekly chart sectors, strongest stocks, dollar review, Ethereum, Bitcoin cross, Bitcoin and alts, declines, analysis on all of that. So we spent a good chunk of time kind of going over all of these stuff. This is the Pro channel, where I give constant updates in what's happening. We talk about altcoins and counts, and we're just kind of watching everything that's happening into the market. And I alert my members to kind of what I see. There is a chat room in here as well, and then also we have the Bitcoin channel, which is right here. This is a newer one where I talk about the counts. I give updates and daily videos on this thing. This is pretty fairly priced. You can come and check it out. You'll have some links below if you're just interested in Bitcoin. And I think I'm going to open one for altcoins as well. I'm still working through finding exactly what the setup will be here, because I have all kind of interesting things that I want to show you and do videos on, and just kind of follow on that. So guys, thanks for watching. I'll be talking to you a bit later, I think next week, right? Today's Thursday. I appreciate you being here as always, but please don't forget to subscribe and like, and leave a comment if you might. All right, I'll talk to you later. Bye-bye.